Friends, welcome back to my YouTube channel. The introduction of my topic today. I am going to talk to you on asset reconstruction companies today. Reserve Bank of India on 11th of October 2022 has made certain major changes in their instructions with respect to asset reconstruction companies. I am going to discuss with you major four changes out of all those changes, which are important, and questions may be asked based on these changes in your JIB, CIB as well as in promotional examinations. So let us start with change number 1. To enhance the governance, RBI has made it mandatory that every asset reconstruction company established under SARFAESI Act 2002 must have a board of directors. Every ARC must be managed by the board of directors, and there should be a chair of the board. The board will be headed by the chair of the board. And for appointment of the chair of the board, RBI has laid down certain conditions. Condition number 1. The period of the office, the term of the office of chair of the board cannot be beyond 5 years. Condition number 2. Anyone appointed on this post can hold this post up to the age of 70 years. Means no one can be appointed as a chair of the board beyond the age of 70 years. Another criteria for selection is that the board has to apply the fit and proper criteria in the selection of the chair of the board. All these conditions are very important. And the chair of the board has to be one among the independent directors of the company. And of course, the chair of the board has to be the whole-time director of the company. So, to allow some breathing space to the ARCs, RBI has given a transitional period for 6 months to every ARC to implement these instructions. Change number 2, again very important. They have enhanced the limit of net owned funds of the ARCs. ARCs have been established under SARFAESI Act 2002, and since then the net owned funds limit fixed by RBI for any ARC to conduct the business as defined under the Act was rupees 100 crore. Now it has to be raised from rupees 100 to rupees 200 crore and rupees 200 to rupees 300 crore in a phased manner. What does it mean? It means that the limit will be raised from rupees 100 crore to 200 crore by 31st March 2024 and from rupees 200 crore to rupees 300 crore by March 31st 2026. We have to understand the difference between the owned funds and the net owned funds. This is very important, friends. And you please make a note of these points, which I am going to explain to you right now. Owned funds we calculate by aggregating the paid up equity capital of the company, the capital reserves, the share premium reserves, and any credit balance outstanding in the profit and loss account. plus any free reserves minus accumulated losses and intangible assets. We will arrive at a figure of owned funds. This we can understand better if I refer to the owned funds as the tangible net worth of the company, TNW. I have very well explained these terms in my videos on balance sheets. Once we arrive at the figure of net owned funds, thereafter we have to deduct certain items from net owned funds to arrive at the figure of net owned funds. So we have to deduct from owned funds minus investment by the company in the shares of subsidiaries or in the company in the same group, minus debentures, book value of debentures and bonds, and outstanding value of loans and advances made to the subsidiaries or company in the same group, any other NBFC included. Loans and advances will also include hire purchase and lease finance. So we have to deduct all these items to the extent this total exceeds 10% of the owned funds. So after deducting all these items, to the extent they exceed the 10% of the owned funds, we arrive at the figure of net owned funds. And net owned funds is a better measure of the financial soundness of a company. That is why RBI has taken into consideration, instead of TNW, the net owned funds, NOF, net owned funds of the company. Now let us come to change number 3. And change number 3 is related to the scope enhancement in the expansion in the scope of the activity of ARCs. What is that expansion? The RBI has been registering so far that without the RBI approval, ARC cannot participate in the resolution process under bankruptcy laws. But now RBI has given a permission. They have allowed the ARCs to participate in the resolution process under Insolvency and Bankruptcy Code 2016 as a resolution applicant. And this is a major change. But the condition is there that only those ARCs can participate in the resolution process as resolution agent, resolution applicant, who have net owned funds rupees 1000 crore or more. Only these ARCs can participate under IBC code 2016 as resolution applicant. This is also a very major change, and the RBI after a very long time has allowed these ARCs to participate in this process. Change number 4, settlement of dues. We all know that ARCs are there to buy non-performing assets from the commercial banks. Once the asset has been transferred from the books of the banks to the books of the ARC, ARC has to recover that amount from the borrower. Now, after exhausting all the recovery efforts, the ARC may have to settle the dues from the borrower through a settlement. Now, for this settlement, RBI has allowed, but RBI has laid down few conditions. Condition number 1 is that the amount of settlement cannot be less than the realizable value of the securities available in the account. Mind my words. not less than the amount of the realizable value of the securities available in the account. Number 2, the preferable mode of payment should be lump sum from the borrower. Preferably, the payment should be made upfront by the borrower after the settlement. But in case a considerable amount has to be taken upfront and rest of the amount is to be paid by the borrower over a period of time, that period should not exceed the period as defined under the policy in this respect approved by the board of the company. So the board has to approve a policy in this respect, and within the norms of that policy you can decide you can comply with the condition number 3, and after the settlement the amount is recovered. I hope my information, which is latest one, you can refer to for further details. RBI notification dated 11th of October 2022. So my information may be useful and you may like this information. So in the end, I would appeal to all of you to like and share my videos, and also subscribe to my YouTube channel. Send your suggestions in the comment box in form of a beautiful comment from you. All your suggestions are welcome. Also press the bell icon button so that you can get the notification of my upcoming videos in time. Thank you. Thank you very much.